Hey guys, so I'm going to talk about how you can double your money. You like hearing that? Okay, stick around to the end of the video because I hope you're going to get some inspiration on how to doubling, tripling, quadrupling, making 10 times your money, whether it's in real estate or in other ventures. Look, my name is Fahd Dawood. I've been doing real estate internationally for 14 plus years. I am also the author of The Intelligent Real Estate Investor. You can buy it off Amazon. Press the subscribe button, hit the bell icon. I do videos on Dubai and international real estate, my life, your life, and our path to financial bliss. If you'd like to work with me, there is a link somewhere at the bottom in the description. You can reach out to me. There's several services I offer, including running a strategy session for you to help you understand how to begin your real estate journey or where you'd like to go with it, evaluating opportunities, helping you price and negotiate on particular projects you might have identified, and running a complete handover process for your property. Last but not the least, there is a VIP package that I offer for you to work with me from A to Z. It's specifically for people who are super busy and would like somebody to take care of the entire process like clockwork. Check this out. So this is exciting for me as well to talk about, but I am going to be very realistic when I talk about doubling your money, okay? It's kind of exciting to say how to double, triple, quadruple your money, but I'm going to be very realistic in this video because the more I do real estate, I've been doing this for 14 plus years. I have been an investor myself. I have made money, I have lost money, and then I've helped a lot of people buy, sell a ton of property. I've seen big deals like, so big deals by my standard, okay? A few hundred million dirhams or 50, 60 million dollars involved, 120 apartments, 90 apartments, and even one singular apartment. This is what I'm going to comment with respect to real estate, okay? This is my experience that I'm getting to. So I look at real estate in Dubai, Pakistan, London, France, Paris, south of France, and this is what I am getting to, okay? Essentially speaking, when you are investing in real estate, you're going to be averaging, okay? I'm talking about if you make money. In my opinion, 7 out of 10 people end up losing money, or they're very privileged if they can exit from a real estate investment without losing money. In my personal experience, you're going to average somewhere between 3% to 10%. I would say 9%, but I'll leave it at 10% because in some instances, you end up making a decent amount of money. You average 3% to 10% per year. Okay, and I'm going to touch this, and I'm going to answer those people who say, what about certain countries where prices of properties rise by 40%? And I'll answer that as well. Why do I say you end up making 3% to 10% per year? Now, I'm taking into account, and I'm not statistically quoting this, and I'm not saying this is it, this is the holy grail, but this is my general experience, okay? When I talk about 3%, I'm talking about both rental income that you're gaining and capital appreciation that you might be getting. And I'll tell you why this is the case, okay? Rental income is essentially money coming to you every year, which might be a little bit less than if there is capital appreciation to wherever you are, and then you can sell your property and gain a little bit of profit. You're essentially between the 3 to 10% per year mark, okay? I'll tell you why this is so and how this comes about, okay? In very mature markets like London, Paris, New York, Toronto, you're at the 3% mark after taxes in some instances. Sometimes it's 3% before taxes, and then after the government takes taxes, you're going to be even less than 3%. Okay, just to clarify, this is if you are just an investor, if you've just bought real estate and all you're doing is holding on to the real estate and just renting it out, grabbing your rent, and in some cases reselling it. Okay, so you are going to be making in the mature markets 3% to 5% in some cases like London, Paris, and so forth. In areas like Dubai and the emerging markets, it could be 7%, 9%, 10%. Even Dubai, as it goes to a maturing market, the percentage returns are coming down. Okay, now, okay, granted that Dubai is tax-free, but because it's an emerging market whereby risk is higher here, okay, so the risk in emerging markets are higher, therefore the returns are higher. Okay, so the risk is higher, therefore the returns are higher. Fine. Now, as I said, this is if you're just a real estate investor, you're just taking your property, renting it out. You're buying land, selling that land after a couple of years, or you're buying your property and selling it after a couple of years. Most of the times, you're going to be averaging 3 to 10%, or 3 to 7, or 3 to 9%. This is the global average. Do not by any means expect that you're going to be doubling your money in real estate instantaneously, okay? Now, some of you might quote examples of Pakistan, some examples of other countries in the Middle East or India and so on and so forth. And you might say, well, you know, land prices go up by 40% over there. What you need to take into account is, I'll take example of Pakistan. When land prices go up by 40%, essentially speaking, and this has happened over the last couple of years, over the last 5 to 10 years. If land prices have gone up by 40%, the currency has devalued. Now, this is, I'm not talking actual exact figures, so don't quote me, but the currency in a lot of cases has devalued by, I don't know, 20 to 30%, maybe 20 to 35%, right? We know this for a fact, right? Specifically, I'm talking about Pakistan. So if property prices are going up by 40%, and over a period of 5 years, or 50%, but the currency has devalued. So if you take that profit and bank it and then try to export that money out, you know what? You're buying less dollars. You're not able to buy as much as previously you could. And some people will still argue, no, that's not true. Even if the currency is devalued, maybe you're not going to take your money out. You're just going to buy services in the country itself. Well, guess what? It's still pretty bad and drastic because inflation, when the currency devalues, inflation goes up, and I'm not going to put that on the board here, but when inflation goes up, essentially from that same amount of money, you're going to be able to buy less. So you're going to still average here. You're still averaging here. Do you know why you're still averaging here? This is the thing. One of my mentors, bless him, right? His name is Nabil Abdul Khalid. He was the founding member of the team that set up UPS in Canada, the 12-member team from the USA that went into Canada and set up UPS, that big global logistics company. He said one thing to me, and I'll never forget this. He said, Fahd, you take away, in terms of value, from the table. When you come to the table, you take away in terms of value how much you bring to the table. So value in, value out to you, right? So the more value you bring, the more value you're going to be able to take. So think about this, right? Essentially speaking, if you've bought a property and you've managed to rent it out to a tenant, or if you've bought some land and all you've done is held onto it, what real essential value did you bring? Yes, you brought money to the table, you bought property, you did take some risk, right? It's a real asset, and you're managing a tenant. Therefore, you definitely deserve somewhere in returns between range of 3 to 10%. You've done all that value add, right? So if you kept it in the bank, you might get about 1.5 or 2%. So definitely agree that you've added more value to the economy and it's a mini business of your property. So you should essentially get 3 to 10%. Bravo, I agree, right? Now, how would you, if you're doing real estate, add extra value to be able to get more than 3 to 10% and get to where you're like maybe making 50 to 100%? Well, you look at current trends in terms of where the market is headed and then add extra value to be able to attend to a certain niche or a demand where others perhaps are not associating or providing value. Okay, so what would you do? You would do short-term rentals, right? You would do Airbnb, right? You might choose to, I'm not going to talk about trading, but you might choose to do, I think in the UK you call it HMOs, like you do, this is short-term rentals of the full apartment. In Dubai also, it's not like you got to really do this in a legal way, but you can rent out certain like a few rooms to individuals, but you got to do it the legal way, right? So you got to book with Dubai Tourism and do it proper way. But essentially, again, but I'm just giving you an idea, okay? Short-term rentals, like Airbnb was super hot. Like when the last recession hit, right? Dubai people have made 17 to 18%. One of my friends used to make 17 to 18% in Airbnb, right? But then now with Airbnb, you're adding extremely, well, I'm not going to say extremely a lot of value, but you're adding much more value. So it comes back to this, right? The more value you add, the more value you're going to be able to take out. So here's my friend. He's got an apartment in downtown overlooking Burj Khalifa. New Year's Eve is going to get him a lot of money. Like his New Year's Eve bookings were like, 3,000-4,000 dirhams when things were really hot in Dubai, right? But what was he doing? He was running Airbnb. What do you need to do if you want to run Airbnb, right? So you need to be on a portal. You need to list on Airbnb. You need good reviews, right? So you need to be an excellent host. You need to have a clean apartment. So you want to run a maid service that actually cleans after the guest leaves. You want to put good pictures, right? So you have to have very good pictures. You have to be in tune with what the pricing should be per night. So does that make sense? Like, if you, as a buyer of real estate, all you do is take your apartment and rent it out, you do deserve 3 to 9%, right? If all you've done is that's good value you've added. It's good. Now, if you add some more value, run Airbnb and do all these things on a daily basis. This is a friend of mine. Bless him, he's got a very large family and he works in a very good salaried position, but was running eight properties. This was his passion, right? So if you you're doing all of this, guess what? You're going to end up making 17 to 18%. He was making 17 to 18% net per year on these properties. Bless him. Love him. All the more power to him. Now, check this out. How do you end up making 10%? Right? Now, I'm going to make a little point over here, like a side point, okay? People double their money in or during the original Dubai boom, right? 2003 to 2008. And sometimes, even in the last decade, people have made up to 10%. Check this out. You know essentially what you're bringing to add more value? You're bringing more resources. You are bringing more resources, and then the same mentor, bless him, he was my first partner in real estate. What he said is, Fahd, you should always be looking to maximize the value of resources. Easier said than done, but at least you can hear this. Okay, check this out. So you're bringing these resources together into an Airbnb and then maximizing those resources to be able to pull more value out, right? Now, how do you get 10% or you double your money? In my personal opinion, risk. You can't see this. Here, let me block this. Can you see it? Well, let's say it's risk over there, okay? If you take more risk, okay, let me just write. I personally believe that risk also, let me cover it like this. Risk is also a value add. It's a mega value add. It's one of those resources if you have an appetite for risk, because don't forget this, right? During the Dubai's mega boom, the first mega boom, there were a lot of people who didn't believe Dubai would become this big game property market, okay? And they played either too small or they didn't want to risk their money, right? Same thing, Dubai is an emerging market. Maybe Philippines is an emerging market, maybe Vietnam, maybe Cambodia. I don't know. But if you go to emerging markets, there's less clarity. Guess what? Dubai today has a very good regulatory framework to protect you. Back then, it was like, it was tough times, right? People used to make deals in coffee shops. You weren't sure what you were buying was actually a property or just a piece of paper, right? Maybe you're just buying paper and there's no property behind it. Maybe the person who's selling you that property has already sold it to 5 other people in that same cafe on the same day. Today, we've got QR codes. You can double check if a title deed is actually valid, etc., and so on and so forth. Okay. Now, here's something that I mention in my book as well, The Intelligent Real Estate Investor. And I state very clearly, not to get too full of myself, but I say, look, if you want to really make a lot of money, it's not real estate. Do you know where it is? We're going to write it right here at the top. It's running a business for yourself, okay? It's running a business for yourself, but do that only if you know how to do marketing, sales, human resources, management, blah, 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 all the things, right? Because, sometimes you go do an MBA and during an MBA, you specialize, because I went to a business school, you specialize in one area. Sometimes it's HR, sometimes it's marketing, sometimes it's finance, so on and so forth. Running a business means that you've got an MBA in all of those areas, right? Now, essentially speaking, if you bring to the table, when you're running a business, more resources, and then organize them by adding more value to somebody's life, for instance, like Amazon does for us, or Netflix does to people who are looking to binge watch on shows, then guess what? You can make big money, right? Essentially speaking, it's the more resources you bring in, so the more value you bring, the more money you make. Now, can you do that in real estate? Yes, you can, but then you need to add more value. And one of the other ways that you run real estate as a business is you go into the market when the prices are really low, like they are today, and then you acquire assets which you can flip as the market improves, okay? Or sometimes you can acquire distressed assets even wherever the market is by just looking for assets where the delta is enough for you to be able to flip them, okay? So if, essentially speaking, the market price of a particular property is 1 million and you can pick it up at 800,000, and transaction costs, with the transaction costs, you're at 870, you can essentially sell that back into the market at 950. Let's say even the market price was 1 million, but you could sell it at 950. The delta over here is 80,000. So you're making 80,000 in your pocket. Is that possible? Yeah, it is possible. You just have to have the risk appetite to be doing this. And as I said, that risk is a value add. It's a resource for some people who bring it to the table. And if you're able to do that, sorry for the people who hate my voice going so high, it's remnants of the public speaking days, but if you're able to do that, you're going to be able to make money. I'm going to give you one last example. A lot of people might say, you know, maybe it's just luck. It's not. In my personal opinion, it's not luck. It's about your mind allowing you to attract that money to you, right? Because check this out, right? Can you guys see this? Bitcoin. A lot of people made a lot of money in Bitcoin. I could have done that. You could have done that. But perhaps if you're looking at this video, perhaps you didn't, right? Or perhaps you were late to the party. Do you know why? Your risk appetite. You had not reached mentally to a stage where you had enough value add to allow yourself to take the risk to invest in Bitcoin early enough, right? Those who had that mental aptitude, they had used their resources or their time to develop their mindset in a certain area to add extreme value to their own lives and had that risk appetite to be able to benefit from that Bitcoin thing. It wasn't just, you know, poofy stories. It was real. They made money, but they added value. Those who are not willing to add value, play it really safe. You're here. You're with the bank. Nothing wrong with that. You're at the 1 to 2% level. Play it a little bit harder, 3 to 10%. You want to add real value. Play with the big boys. Do this or this. And don't forget this. And my mentor said, the value you bring to the table is what you're going to take away from the table. Bless him. If you want to work with me, reach out to me. There is a link. Hit the subscribe button, press the bell icon. Talk to you soon. Bye for now.